everyone. My name is Jaden. I'm on the Vancouver Startup Week team. I would like to take a moment to acknowledge that we are grateful to be virtually gathered on Indigenous land, regardless of where you are joining us from. I am grateful to be on the traditional, ancestral, and unceded territory of the Musqueam, Tsleil-Waututh, and Squamish peoples, and I'm privileged to live, work, and play on these lands. First, I'd like to thank you for joining VSW 2021 and welcome you to Bitcoin as a Treasury Management Asset for your startup and business, hosted by Renno & Co., Canada's digital law firm. This session is part of the VSW Founder Track, and I'm proudly supported by Sage Accounting. Sage knows that you didn't start your business to become an accountant. Sorry for the accountants, but Sage keeps your business organized and running smoothly, tracks your cash flow, send out invoices, and keep getting paid quickly. Visit Sage Accounting booth to gain access to free guides and templates to start your business finances right away. Plus, get exclusive VSW discounts if you're ready to switch from Excel. During this session, if you have any questions for our speakers, please post them in the Q&A in the Whova session. You can also upvote others' questions. You will also find an introductory poll with a few questions asked by the Renno & Co. speakers. So now I can pass the mic over to David and Tofiq to start the Renno & Co. session.
Thanks, Jaden, and thanks to you for sure for introducing us to Vancouver Startup Week, helping facilitate this session, and getting us here today. And hope it will be valuable for everybody in the audience. And definitely we want this to be as interesting and engaging for everybody as possible. So anything you're wondering about any of the topics, feel free to reach out. We're always happy to dive in. Today we have myself, David Oram, and my business partner, Tofiq and Looney. We both work in the emerging technology market. For Tofiq, expertise very much on the venture capital, private equity, intellectual property, law side of things, and an absolute stalwart in the Bitcoin community around North America on the legal side. And I'm an entrepreneur as well in the emerging tech market, background from finance, sustainability, science, and yeah, absolutely thrilled to be here today. So a little bit more about Renno & Co. As Jaden mentioned, we're Canada's digital law firm. We specialize in supporting startups and technology companies throughout all stages of the life cycle. We say from incorporation to IPO, we have you covered. And this is everything that goes into developing the organizational structure, getting your patents, trademarks, making sure all your contracts with your service providers are tight, getting you investment, but also not just providing a legal service, but really being a business partner and advisor that can work with you and translate that knowledge that we get from working across a lot of different industries, blockchain, AI, clean tech, med tech, apps, you name it, we've seen it. And that translation of knowledge is really where we pride ourselves, as well as bringing as much innovation and technology to the service that we provide. You know, we don't spend a great deal of funds on boardrooms and artwork. Instead, we make sure you have good Asana and good Zoom. And that's the bread and butter for the way that we work with our clients, and much more accessible for startups to that end. So to get started, we want to know a little bit more about you guys. So Jaden, I think you have the first question in the hopper. So yeah, we're curious who here holds crypto currently. You know, people, you got a bit of Bitcoin, you've heard about it enough, you've got the few dollars on. Are you big on ETH? You think that's the way to go? Or are you deep down in the altcoin world of everything else that's going on in the crypto world? Curious to see.
Oh, I'll keep that screen off there. Seems to have a background issues. So we have about 60% of the attendees holding crypto and about 60% also holding stocks, and 80% own a company or a startup.
Nice, nice. Well, hopefully this chat then is going to be very pertinent for you, and maybe that'll be one of the questions we can have a bit more of a conversation about later. Is the Bitcoin normally held personally and you just sort of bought it, or is the is the Bitcoin actually part of your business asset management strategy? And that's what we're going to get into today. But before we talk about Bitcoin, let's talk about the dollar. This is a great graph that you may have seen going around a lot lately. This is from Visual Capitalist, and this really shows how the dollar has evolved over the past 120 years. I quite like this one. I find you can really learn a lot just by looking at it super quickly. And it's interesting to know as well that, the dollar has gone up and down in value over years. But the analogy at the bottom is that $1 in 1913 would have bought you 30 Hershey's chocolate bars. And in today's US dollar, that would cost $26. And you can see that obviously after the Second World War, the US dollar continued to be a hot commodity and had went up in value again. But since then, particularly since Bretton Woods, where the US dollar's got off the gold standard, basically became a petrodollar, the overall value of that dollar has continued to decrease. We're now basically $1 is going to get you one McDonald's coffee, and that is about as good as you're going to get. And something else we'll revisit later is that the U.S. money supply in 2020 increased by around $4 trillion, and that was equal to 20% of all dollars ever created. So when you're thinking about Bitcoin, is obviously a very contentious item, and what it means, where it's going, what it stands for. But I think it's always important to relate that back to the current system. And that's very much the dollar and the purchasing power of that dollar and how that is being basically brought down to as close to zero as possible. So particularly on that last point that I mentioned with regards to it's actually $25 have been created since the start of COVID. Now with the last little bit of quantitative easing, COVID relief, whatever you want to call it. And this is, dollars that were not in the market before that have been made available, obviously via loans from central banks, other financial institutions, so then they can pass it on to the government so they can give out stimulus checks, et cetera. And this is just the US we're looking at, obviously the reserve currency of the world. But you can see how there's very gradual growth. And this graph only starts back in the 80s. Is very gradual growth, looking at around 2 trillion in M2 money supply, all the way up to 2008, when that quantitative easing set in, everyone thought that was like, whoa, holy. But when you look at what's happened in the past year, that's nothing in comparison to how COVID has really changed our relationship with the dollar. And that is one of the reasons why you've seen such a run up in Bitcoin recently, is because regardless of what you think about Bitcoin as an asset or anything, the fact that there's more dollars around means that there's more dollars to go around to buying things like Bitcoin, pushing up the price. So as we're looking back at the other chart as well, you see that the $1 is not going to get you as far as it used to, even if Bitcoin was equally as valuable as it was even 2 years ago. So that was a little bit more on the US and I say the global reserve currency. And this is a great one as well, I find, in terms of breaking it down a little bit more country by country and how this debt has been introduced to the market. Yet again, only since the end of 2019, since COVID, and this chart's even a little bit dated because this only goes up to last fall. If we were to look at this up to now, it would be even further. And it's just stark to realize that Canada has taken on by far the most debt of any G20 nation in the world, almost like twofold more than any of the other nations. Japan, the US already had massive debt, and we've just absolutely leaned into this model, as I think everyone here will know, from curb checks to CBIS for your businesses to the CEWS for the big companies, etc. The government, to mortgage relief, everything. The government has really allowed additional debt to be given to the system as to not collapse the entire economy. How we get out of this is obviously to be determined, but you can see sort of where the ethos of the government here in Canada holds, and obviously the US and other large nations as well. And this graph sort of broken down amongst households, non-financial corporates, and then government. So A dollar ain't worth what it used to be. So that brings us back to Bitcoin. Since the inception, how has the narrative around Bitcoin changed? This graph, looking at it off the hop, might look like a odd country flag that has evolved over the years, but the way to look at this is looking to the left here, starting at Bitcoin's inception in 2009 to 2018 was when this one was taken from, but that narrative still kind of fits, is how has this narrative about Bitcoin changed since things first got going? And it's interesting to see here, when it first started, it was basically this e-cash proof of concept. It was really just trying to evolve on other types of digital currencies that had been invented before and trying to do more and more novel things. And this kind of narrative around e-cash and ability to spend it and the fact it was kind of slow didn't really matter. It was better than going through the existing infrastructure at the time, and it was much more cash-based. But you can see that that narrative over time has basically vanished, and no one really thinks of it as e-cash anymore. The cheap payments network still is one of the red band here in the middle, and that has sort of continued to evolve. And if you look that one at the 2021, still holds to a degree. And then as well, looking at the yellow down bottom here, the censorship-resistant e-gold, that one has continued to expand and ebb and flow over time, with some other narratives emerging, particularly the reserve currency for crypto. There wasn't a lot of onboards from fiat, dollars into crypto over the years. And Bitcoin has really became the reserve currency for all these other assets, tokens, you name it. It's kind of get into Bitcoin. From Bitcoin, you can get into ETH a lot of times. From Bitcoin, you get into stable coins, et cetera, et cetera. And it really is your portal into the rest of the world. And as well for straight investors, and one that I think is super important for businesses to think about, is an uncorrelated financial asset. The last little bit, maybe that narrative is that maybe there's more correlation than there used to be. Now that it's it's a bit of a zeitgeist and a bit of a hype piece, but it's still a lot of uncorrelated attributes with this compared to the dollar. And one more slide from me here before pass it over to Tofiq to get into the nitty gritty of how you can use Bitcoin in your business, is with regards to the stock and flow model. This one is a very popular model online in a way to track Bitcoin and how it is evolving. So there's quite a few things going on in this chart, actually. So I'll take a quick second to explain and really recommend people to check this one out going forward. It's mainly with regards to the relationship between price and Bitcoin halvings. And Bitcoin halvings, for those who aren't familiar, are when the mining difficulty becomes twice as hard and the rewards for the miners become half of what they were. So if we look all the way back down here and back at the beginning, 2009, 2010, 2011, when Bitcoin was first getting started, all the miners, so all the computers that were keeping the network going, they were getting a lot more rewards for helping mine Bitcoin, because Bitcoin was basically useless. You always hear the story about, oh, someone spent 10,000 Bitcoin on a pizza, like they could have been a trillionaire today. Like that's kind of a nonsensical thing, is true. But if they didn't spend it and do that market finding and able to actually prove that this worked and you could buy pizza with it if you so chose, still could, then you would never have been able to do this initial price finding. And this is all, between 1 cent to $1. In the very early days, the rewards for Bitcoin miners was very high, but the value that they were getting was kind of low per Bitcoin. And this chart on the left is an exponential moving. It's going from obviously 10 cents to $1 to $10, et cetera, all the way up to $1 million per Bitcoin. And that's where this overall graph tries to pinpoint, is when will we reach that $1 million Bitcoin, and then the overall market cap of Bitcoin at that point being the 1 million per, 21 million outstanding, being into the multi hundreds of trillions actually. So a way to look at this, and a little bit of the color scheme on the right as well, is how close you are to the halving. The blue side being very close to the next halving, and the yellow and orange being very far away. So if we zoom in to this piece right here, this is kind of where we're at right now. There was a halving back in May 2020, and that starts off the next run up in cycle. And we saw this before back in 2017-18, when most people probably first wanted to get into it back in 2013-14. And sort of after this halving, there's sort of this momentum that follows. And now that there's going to be less new Bitcoin available, the overall network is becoming even more entrenched, and the value of everything that is developed there is becoming more robust, more apps, more users, etc. And there's a run up in price. And you see these run ups in price, then you see a bit of a correction over the short term, and then a fast run up in price. And that sort of in 2017-18 got us around that $20,000 Bitcoin. Then you sort of saw it go down and not sort of touch that level again for a number of years, basically from the start of 2018 only until just the end of 2020, where it finally passed its old high from a couple of years prior. And now the model is predicting that we are basically in one of those run-ups again here, where we are looking to push up through the 100,000. You'll see all the laser eyes on Twitter. That's sort of everybody in the market thinking that, yeah, we're super focused on having the $100,000 price point per Bitcoin, and following sort of this leading up to the next halving, or since the last halving, leading up into the next cycle. And obviously the recent pullback here in the past little bit from around 60 to just below 40 into the 30s. So it'll be interesting to see if, as in these other events where there's a bit of correction and it pulls up, if we do hit here and then we trade sideways for a couple of years before we start running up again into the hundreds of thousands of dollars per Bitcoin. So this is a very popular model that a lot of people go back to, and you can see the correlation here is fairly strong. A little bit maybe of a self-fulfilling prophecy, who knows? But yet again, when you're looking at trends and charts like this, always think back to, what is the dollar doing? Even if you didn't necessarily care for Bitcoin, you were worried about X, Y, and Z, potential security, energy use, you think you don't know who Satoshi is, you think it's a farce, etc. Even the fact that there's many more dollars available on the market, and this is working, is doing what it says is going to do, which is to have a digital currency that works, then this will continue to increase, especially if the market continues to be flooded with dollars. So that's it from my end, a little bit more on the historical perspective of how we've gotten here and what that means for Bitcoin and the dollar. And now I'm going to pass it over to Tofiq to dive into much more of how you can use Bitcoin in your business, storage and custody, people always worried about, and then as well taxes, and then be able to take any more questions you may have. Thanks.
Thanks, Dave. Really appreciated that. It was a good summary of kind of the monetary backgrounds and the analytical backgrounds of Bitcoin. I'm going to be getting into kind of more of the practical day-to-day aspects of your ability to potentially use Bitcoin as a mechanism to manage your company's treasury, and what are the positives and negatives of going about that. So I think to kind of put this into kind of into a large and bird's eye view kind of contexts, I think you guys all run your companies, and your companies may be at a variety of different stages, but you know as a CEO, if you are, that a company survives as long as it has cash in the bank. And a big part of a CEO's job is to make sure that there's always cash in the bank. You know, everyone's talking about burn rates, everyone's talking about runways. And these are things that you as a new startup founder keep you up at night, right? You got maybe a couple of employees, you got to raise that round of financing, you know, you got a 3-month runway, and you start getting hot under the collar because your investors are dilly-dallying. It is something that all of us, including myself, especially on the early days, have to stress about. And even as running a much more mature business these days, have to stress about from time to time. So how can Bitcoin kind of assist you with some of these problems? Well, first, let's go back to kind of the fundamental understanding that David was saying, is that your purchasing power vis-a-vis your dollar is devaluing year over year, right? Is devaluing not only because of the increases of money supply, which in and of itself is not a necessary condition to a decreasing purchasing power. It is also that such movements could spur inflation, and that certain other fixed cost prices have a certain stickiness to them, which may hurt you down the line. An example of this is, let's say your clients are price sensitive and inflation now raises your raw costs to kind of produce your goods and services. What do? Well, you essentially eat the margin, right? If your raw costs go up by a third and your prices stay the same, you know, you've essentially, everything's gotten more expensive for you, and you haven't been able to deal with that. But what is inflation, right? I think inflation from a purely economic standpoint is the rate in which prices increase, which is based upon what's called the consumer price index, which is essentially a basket of goods that some economists said is what everyone wants to buy. However, that's not necessarily true, because inflation is really subjective to what you want to buy. And what are the goods that you want to buy today or in the near future, and what are the price changes that are happening of those goods? Let's say you are, you know, a young professional and you're looking to buy a house in Vancouver, right? So if your salary is going up at a rate of, let's say, 5% a year, but the housing market is going up at a rate of 25% a year, then inflation is going to be quite high, because part of your basket of goods that you want to purchase in the future, and a fairly large amount of that basket, is actually increasing at a fairly high rate. So much so that if it continues to go that way, there could be a logical conclusion that you may be priced out of buying a house. And we see this in a lot of kind of mega cities like London and New York, where, you know, folks need to be making a fairly ridiculous salary, or making actually an increase of salary quite quickly to be able to keep up with the pace of that cost of inflation. Another thing that a consumer price index doesn't take into account is the cost of savings, right? How much does it cost for you to save? What is the average prices of the stocks that you want to buy on the S&P 500? Has it increased? Has it decreased? And what is the rate of increasing vis-a-vis what is the increase of the revenues in which you're making as well? And these principles apply to you as a business owner and as an individual as well. So what happens? Well, you need to have cash in your bank because cash is king when you're running a business. You want to make sure that you can pay your bills and you're not stressing about them. But over time, you're going to start that purchasing power of that cash is devaluing. So what business owners need to start thinking about is what is an asset which has an accruing interest value that is decoupled from the devaluation and inflationary pressures around dollar fixed amounts, which is also liquid, because again, you want that liquidity in order to be able to use that cash when need may be. So buying a house, for instance, might not necessarily be the best way to go forward because it's quite an illiquid asset, even though it does increase. So Bitcoin comes in with an extremely interesting solution for treasury management for startups because it's an accruing asset that allows you to have extreme liquidity. It takes me a couple of seconds to liquidate my Bitcoin, right? Even stocks can take a couple of days. So with that in mind, it really does beg the question, should I keep some of my money in Bitcoin? And if you've seen the past performance, on average, Bitcoin is accruing at a rate of 20% year over year. So by having your assets in Bitcoin, the cash that you've made today, if it's kept in cash, is going to be devaluing at the rate of your subjective inflation or your company's subjective inflation, vis-a-vis what you and your company wish to buy, whereas the Bitcoin will be increasing at an accruing interest of about 20% year over year, and also will have you retain your purchasing power vis-a-vis the assets in which you want to buy. So having the position in Bitcoin is actually an extremely smart move for cash management. And it's not something that is completely out of the ordinary. You know, a lot of these massive companies actually have huge financial service sectors that actually help them increase their cash flow through savvy investments. Now, you don't have to be GM Financial or Ford Financial to do that, and it may take a bit of time and resources for you to actively manage a portfolio for your company, but a much more easier way to get certain returns that will allow you to retain your purchasing power is Bitcoin. So I guess that's the theoretical standpoint about why it's a good idea to keep treasury in Bitcoin, or a piece thereof at least. So moving on to the next slide. Well, how can you go about it? Well, there's a couple of ways. I think first, probably the easiest way is to begin accepting certain payments in Bitcoin. And this is actually a lot easier than you may think. We got two potential wallet providers here on the screen: ShakePay, which is a Montreal and Canadian-based company, and Coinbase, which is one of the largest crypto trading platforms in the world. But they can effectively act as your checking account in which you can kind of receive certain funds from people through payment. And it's quite easy, actually. You just send them your public key address, and then they can send you the Bitcoin. It's much easier, especially if you're dealing with larger amounts where Interact e-transfer is over that threshold. It's a lot easier than telling your client to put you on as a payee on their bank, or having them to go down to their bank to pay you, or even, God knows who does this still, but that they have to write you a check and mail it, so to speak. Which, by the way, it sounds asinine, but most law firms still operate on that model. And obviously, credit card and stuff like that, there are certain limits to the amount that you can receive via credit card as well. So you can actually have a pretty easy payment on-ramp in which allows you to receive BTC or stable coins as a method of payment. Now, for everyone who doesn't know, a stable coin is essentially a coin that is linked to a currency in its value. And I will go into the details, but there's a couple of different stable coins and the nature in which they work, but more or less they are pegged to the value of the currency in which they say that they are pegged to. So USDT and USDC are pegged to the US dollar. There's a variety of other different coins for other currencies as well, such as Euro Tether and others. So when you accept the amounts from a taxable perspective, you still are taxed as corporate income on that amount. So there is still an amount that you need to pay, and that amount also is will need to be charged sales tax if you have to charge sales tax as well on the services in which you offer. So Bitcoin does not deviate from those tax obligations that you have. You can also put pressure slightly on your cash management because those taxes will have to be paid in cash. The CRA does not accept Bitcoin at this time, but as stated earlier, liquidation of Bitcoin assets takes a couple of seconds. So that's one way, is just to start receiving it. Another way is that you purchase the Bitcoin outright and move a substantial amount of your current treasury into BTC. And the way you can do that is very similar to the other ways. You know, you open up these wallet accounts, and then you load those wallet accounts with a certain amount of cash. On this note, you're going to have a bit of trouble, I would say, with the amount of money that you can wire. Coinbase and CoinSquare have limits that are quite low, and they are notoriously slow on actually getting your amounts loaded into their accounts. However, ShakePay is actually very fast, and I've had ShakePay load my accounts with thousands of dollars in the same day, which was kind of nice. The only downside of ShakePay is that they do have quite a large spread. So the price of the Bitcoin that they state on their website is relatively expensive to others. But again, that's just me kind of weighing the positive and negatives of all these websites. And when you do that purchase, and you have a disposition of assets there, cash assets into Bitcoin, and then you are going to still have to pay on the corporate income tax on the cash reserves of your treasury, and at this stage, you would also have to pay if you sell your Bitcoin down the line. And that works in this way, in which when you sell your Bitcoin, you have to calculate the price of the purchase of the Bitcoin vis-a-vis the price of sale. And the difference there is subject to capital gains. Again, it's Bitcoin does not alleviate tax responsibilities, but as I said, as the little Muppet here is continuously saying, if you don't sell your Bitcoin, you don't have to pay the capital gains. And this is something that could be pretty fun down the line here. And maybe we'll switch to the next slide and I can get more into it. So with the Bitcoin that you have, with that, you can do a lot of kind of cool stuff with it in your treasury. And you can start leveraging those assets to get yourself a collateralized loan in USDT or USD itself. We've listed two folks that do this here, Celsius and BlockFi. If you want a Canadian version, I think CoinSmart is a good place to take a look as well. And what it essentially is that you can take your Bitcoin and you can collateralize it for a loan to value of about, I believe, is 33%, and you actually get fairly great interest rates if you have a decent amount of Bitcoin. If you don't have that great an amount of Bitcoin, the interest rates are less than what you would get from a bank, are more than what you would get from a bank of a line of credit. But if you have, in the range of a Bitcoin and up, you're going to be getting some really nice rates. I'm talking about, like I think we checked it out the other day. It was like $70 on Celsius of interest rate per year for like a 100K loan or something. Don't quote me on those, but it was very, very positive, so to speak. So that allows you to leverage your Bitcoin to get some more, added assets, so to speak. And you may say, well, I could just go to the bank. Well, yes, you may, but if you guys have ever tried to open up a line of credit with the bank, it's a pain in the butthole. And a lot of times for young startup founders such as yourselves, it may be actually really tough for them to give it to you, especially if you have poor credit, historically speaking. Lastly, another way that you can manage your Bitcoin is, again, Bitcoin in of itself is an accruing asset, but you can actually increase that accruing asset by yielding your Bitcoin. And you can yield your Bitcoin similar to a high interest savings account that you have with your bank, again, with Celsius and BlockFi, in which you deposit your Bitcoin in their accounts, and they'll give you, I think, on average, 6.5% annually. It changes here and there, but around 6.5% annually. So you could go and have the accruing interest of Bitcoin, and on top of that, the yielding interest that you're going to make by putting on there, just maximizing the amount of money that you're going to be making from that. And then from there, you can receive loans and leverage things out as well. So found that very interesting. Again, another idea here is you see, David, do we got to stop? Or are we almost done? Or
no, we're good. I was just going to mute. There was some activity in the office here. That's all.
Oh, okay, cool.
And,
cool.
and I was going to jump in on one point there, because I think it's a super compelling part while you're explaining here, because I think it's really easy for people to understand that you can just buy Bitcoin, and hodl it kind of thing. It's very much the way people understand what they can do with it. But I think the narrative around understanding how to be a bank with your funds, like you said, like GM or Ford do, and is the dual side of this, is the fact that you can loan against yourself and get money for yourself for immediate liquidity needs, where you can also basically loan that Bitcoin out to others, and then you're being the bank for others. So that dual side is quite powerful, which basically nothing else on the market does. And that's even just with baseline Bitcoin mechanisms. And that has nothing to do with the evolution of DeFi. But yeah, we won't get too deep into that today, because that's a whole presentation in itself.
Yeah, no, I think the key takeaway here is that working with banks to get debt financing can be fairly pedantic and Kafkaesque, and there is a lot of barriers to entry between you and your ability to have access to credit. Again, another thing that is important for cash management of businesses is to have that access to credit, right? Not that you necessarily need to use that credit, but just being able to have that access just in case stuff happens, which, as we know from running businesses, all of us, I presume, stuff does happen and shit does hit the fan. and being able to leverage your assets in a way in which is quick, nimble, and competitive to what the banks are offering without really needing to go through that red tape is I think, like Dave said, very compelling for young entrepreneurs, so to speak. So on the last point is, again, your ability to leverage a little bit more your assets and treasury, enable you to get more returns from money that would be, essentially sitting in your checking or savings account, making nothing. If we presume that inflation is actually more around 15%, your high interest savings account of that, even the highest one you may see may be like at 5%, you're still devaluing your treasury at a rate of 10% year over year. So if you have a little bit of a higher risk appetite and a little bit more of an understanding of the nature of the market, again, you can leverage your assets a little bit more through kind of different trades, just essentially not only trading crypto, but you could be trading stocks and other assets as well, to be able to kind of expand upon your treasury position. Again, I would definitely caution anyone on doing this before going about it, because you can lose all your money. It is a risk. Bitcoin is also a risk, as you've seen. There is a fairly large dip recently in its price, and it does go through these volatilities, and it will in the future. So all of this is essentially more risky from a traditional sense, but as well, one has to weigh the opportunity cost risk, I would say, vis-a-vis keeping it in cash. So we got 2 questions here, and I'll quickly get to them here. So question number 1, and I'll read it to the audience so everyone knows. How do you recommend people set up their personal accounts to minimize taxes on crypto? So crypto does not preclude you from paying any taxes, so to speak. So
I'm gonna hop 2 slides there for you quick, Toph, just because we do talk with taxes there. That might be able to be a little bit of a backdrop for that.
Oh, cool. Perfect. Thanks. Yeah. Thanks. So so with that in mind, what I would suggest is, depending upon the way in which you're trading, the best thing that you can do is really to subscribe to one of these crypto tax accounting platforms that actually embed themselves as extensions on your crypto trading platforms, because it will actually completely capture everything that you do and calculate your taxes for you. It's a huge lifesaver. Trust me and Dave on this. It's a freaking lifesaver, because essentially, if you have to take into account what was the position in which you bought the crypto asset, and then what was the difference in which you sold it, and especially if you sell it not just back into CAD, but into another crypto asset, you then have to calculate that residual capital gain as well as it continues going on. And it's quite difficult, especially if you're a very active trader, so to speak. So the 2 guys I would recommend is TaxBit, which are American, but have very strong backing. PayPal Ventures have backed them. The Winklevoss twins have backed them. So those guys can help you out there. The other one, which is, again, I always like to give everyone a Canadian solution as well, is coinlevy.com. Levy spelt Levy.com. They also allow you to keep track of your crypto solutions and management. You
And I was
will,
going to jump in there,
yeah.
Tofiq, on that piece. It says one of them, as much as it is the tools that can help you manage it when you have a taxable event, the other is the tried and true method of buy and hold and average cost your Bitcoin. If you're somebody who's trading in and out of a lot of altcoins, et cetera, yeah, like it's the nature of the beast that you're going to have to do all these calculations with regards to your taxable events. And it's not just when you go back into a CAD and transfer it via like e-transfer back to yourself or anything. It's actually every trade as the law stands. But the other side is like, if you know you just want to be having Bitcoin more and more, you can just continue to buy more Bitcoin as the price goes up. If it's $1,000 every so often, etc., then that'll kind of just increase your average cost base, but increase your overall stack as well. And you never have to sell or never have to pay tax on that until you sell that Bitcoin at some point. So there's a little bit different strategies, the very active management piece and the more passive management piece, where you're just basically going from fiat into Bitcoin and leaving it there for as long as possible and kind of riding that stock and flow model. And I think that goes back to a little bit of the next question that's there as well. Is do we offer any advice and suggestions on personal asset structure when it comes to crypto? I guess the straight answer is no. We'd love to talk about the evolution of the market, the technologies, the business models, and everything. And, doing a risk appetite assessment per individual is what like professional financial advisors are for. And would always happy to kind of chat about the spectrum of how much you should have in each and what your other assets are, what your goals are. Is a very, very robust conversation to identify exactly that, your risk profile, your goals. In general, not financial advice per se. You see a lot of people really load up on Bitcoin, Ethereum, taking up anywhere from, I would say, almost sometimes up to 100% of portfolios, but like 80%. They'll dabble in a few other large cap cryptos that they might know about, Cardano and things like that. And then they'll have like what you see a lot of people talk about is having a gambling fund to go and look at these brand new nascent coins and going after. That's something you hear in the market. And said yet again, to each their own on that end.
Mm-hmm. Yeah. So to add to that, it definitely for you to start doing effective tax planning from a legal standpoint, it's you would have to be making some cash, so to speak, to assist with that. But I would believe for us to assist with that, that's to say, because it does get pretty expensive. But if the returns justify the cost, then I think they'll reach out to us and we can assess that situation. However, if you speak to your accountants and they they do have a general understanding of how to account and for cryptocurrency gains and how it's taxed, then I would say they should be good enough to take care of you there. So I guess we missed the slide here.
We missed the one. We'll go back here and then we can go to the last question there.
Yeah. So again, BTC does have some inherent risks that we had mentioned with respect to volatility and speculation. There's other risks as well. That's not an exhaustive. That's not an exhaustive risk. Another risk, I guess, is storage, management, and custody of Bitcoin. Again, keeping large amounts of Bitcoin on what we call hot wallets, which are wallets that are connected to the internet, such as the ones that were previously stated, can pose a couple of issues from a risk perspective, as keeping them linked to the internet can allow, or within these guys' systems, can allow for these systems to potentially be attacked, and for your crypto to also be put into jeopardy. what I would suggest is if you get to a certain level that you think about uh, taking on your own storage through hardware wallets, which we got a couple of two here, Trezor and Ledger. They look like USB keys more or less. And you can keep them on there if you don't want to yield and put them onto Celsius or BlockFi or anything, because you can't yield off of a hard wallet. But they are, from my perspective, fairly easy to use, but I would request that you guys potentially take a lot of care in listing them, because there is no fail safe in Bitcoin. If it's gone, it's gone, and and it can be a bitch. What I will suggest is I'm part of a website called Coinbeast.com, which I would suggest that everyone look up, which has some of the biggest experts in crypto from a variety of different standpoints, from legal to accounting to security to wallet management to hardware management, etc. And if you want to get involved in some of and understand a little bit more from one of these experts on the security and wallet management side of holding BTC, I would suggest to book a consultation with one of the guys and for you to check it out. Yeah, coinbeast.com. It will have like a little honey badger running through a field as its symbol. And yeah, it's a great project. And if you want to check me out, I'm quite literally there. And you just click on Coinbeast Connect, and you go to talk with the pros, and you got all the pros essentially here. Yeah, it would be, you just see who you want to talk to, and they can help you out greatly with some of the stuff. Guys, I would suggest would be, Ari Ramdell on risk management and security, and Adam Miser on self-custody. They both can help you out on that front, so to speak. So yeah, that's it for custody. There is no currently treasury management services that are coming out for people who want to manage their BTC, but I can let you guys know that it's in the works, and soon you're going to have those types of services available. So last slide here is your culture ready to evolve the way it manages its finances? Boom. Loaded question. But no, I don't want to. Yeah, let's hear it from you guys if on this little poll here, and then yeah, I think we're open for any other questions you may have on anything that you want to ask.
I had one other question come in here. It was a bit on the part that you talked about already, Dave. Do you recommend acquiring only Bitcoin as a treasury asset, or should I also diversify into other crypto assets?
So Tofiq spoke about this a little as well in the very beginning when we were talking about sort of how do you get started, how do you receive it? And it depends on your savviness, to be honest with you. If you've never operated in this space before and it's your very first foray, getting past the Bitcoin piece is going to be enough of a investment of your time, your energy, and your decision making. I would say go there and get comfortable, understand what you can and cannot do by just receiving and holding Bitcoin. Maybe put it on Celsius and BlockFi as we stated to earn a little bit of interest, see how that works. A lot of those basic steps are the exact same for Ethereum as well, which is obviously the second largest crypto by market cap, has a different use case, is more basically like an internet computer than Bitcoin would be like a digital gold. It's Ethereum is more like a really like advanced Amazon Web Services than it is what Bitcoin does. It's a little bit different, but in terms of the next level, that would be the next step after Bitcoin. If you're comfortable with that, would go to Ethereum, and then Ethereum then opens up a lot of other very interesting DeFi options for you. And this is decentralized finance. So this is even more advanced than we talked about with the Bitcoin piece of like getting a loan against yourself and stuff like that. This is actually like a lot of basically internet bonds. So you're staking and trading, and it's much, much more robust. If someone wants to have a chat about that piece, we would, love to unpack that more with you. But definitely say Bitcoin first, then Ethereum, and everything after that is highly speculative at the very least.
Mm-hmm. Yeah, I do want to echo that, because it really is up to your level of sophistication in the space. And, you know, you do have to recall that it is a new space, and there are inherent risks. So, you know, I hope this was a good kind of primer on some of the benefits for it, but again, it doesn't come with its own risks. So I definitely would request that everyone do their due diligence, or to speak with their, you know, proper legal and tax advisors on this subject. And on the legal side, obviously, we're here to assist if you have any questions.
Great. We had another question slide in that was just along the same lines there about how much money you should invest in Bitcoin or as percentage. That seems to be very much the case about personal risk assessment as well. But do you have any points on that?
Yeah, yet again, is the difference between your business and your personal there is huge. You know, we work with some people who would say, you know, have 80% of their personal wealth in crypto because this is what they do. You know, they have been in the space for 4 or 5 years. They work in the space. This is what they know, and their decided comparative advantage is operating in this space every day and all the time. So that is, you know, that's that end of the spectrum. You know what I mean? And that's the type, and they know they want their internet money forever, and they don't nearly necessarily, and they can generate money in cash as they need it, kind of thing. So that's one end of the spectrum. There is the other people's, you know, a lot of our staff members, we've gotten them into Bitcoin, probably Jaden included in the most recent little bit. And, you know, we're helping them get their first like $100 on like ShakePay, for example. So very far ends of the spectrum. All goes back to how you analyze your own needs. And then on the business sense, yet again, it's the same type of variable. I would recommend, if you're on the business side and you really want to geek out the best strategies on this, check out MicroStrategy. Michael Saylor, you might have seen and heard him around a lot. There's a massive warehouse of data and materials he has on that. And, you know, for us, we're obviously very bullish. We try to have as much as we can without impacting the normal operating capital of the firm. But that, yet again, it's relative once again.